Visa, stock ticker V, is trading at $277.17 per share. Now, the company's starting dividend yield is sitting just at 0.76%, but I actually think it has the potential to be one of the best dividend growth stocks over the next decade, and in this video, I'm going to be explaining why. Now, we'll also be touching on things like their most recent earnings report, looking at my Visa position, looking at their growth runway, and of course, jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Visa. So let's go ahead and start diving into it. Now, over the past year, we can see the company's up around 21%, over the past 5 years, up over 95%, and over the past 10 years, up nearly 400%. So this company has had market-beating returns. Let's go ahead and look at this company from a dividend perspective. Like I already touched on, starting dividend yield very low, sitting at 0.76%. Let's go ahead and look at the dividend history for this company. We can see over the past 10 years, they have seen massive dividend growth going from 10 cents per share quarterly all the way up to now 52 cents per share. So it's more than 5x'd in a 10-year time period. So when we look at these dividend growth rates, we can see it is massive. We have a 3 and 5 year dividend growth rate of right at 16%. So that's pretty phenomenal. And the 10-year dividend growth rate sitting at over 18%. So this company has been able to rapidly increase the amount they pay out in dividends. Now, obviously, this means nothing if those dividends aren't safe. So let's jump over to that dividend safety tab. We're going to look at the payout ratio, and my favorite payout ratio to look at is what's known as the cash flow payout ratio, because dividends are paid out of free cash flow. We can see the cash flow payout ratio for the trailing 12 months sitting a little under 20%, and forward looking again a little under 20%. So basically what this means is around 20% of the company's free cash flow is being used to pay out dividends. That is a very healthy range. It still leaves 80% of the free cash flow for the company to do things like buy back shares or reinvest back into the business or pay down debt or pursue strategic acquisitions, which we'll be talking about just a little bit later in the video. Now, something that I love about this company is if we jump over to the income statement, we just looked at the payout ratio. How has the payout ratio changed over the past decade? And we can see it charted out right here. Despite the fact the company has been rapidly increasing their dividend payouts over the past decade, we can see for the most part their payout ratio has stayed right at around 20% for an entire decade. So what does that mean? It means the company has been able to grow their free cash flow per share at a rate as high as their dividend growth per share. Anytime you see a company with rapid dividend growth and the payout ratio staying steady, that is a phenomenal sign. So if we jump over to the statement of cash flow, let's go ahead and look at free cash flow per share and the growth over the past decade. In my opinion, this is the golden metric for all investors. And let's see, we can find free cash flow per share right here. It looks like they went from $2.66 per share in September 2014 to now the trailing 12 months $9.39. So phenomenal free cash flow per share growth over the past decade. And here's what's interesting. I think this free cash flow growth that we've seen over the past decade will once again be sustainable moving forward. And I'll be talking about that in just a second when we look at their growth runway. But first, we need to talk about their most recent earnings report. We can see Visa reported non-GAAP earnings per share of $2.41, which was a beat by around 7 cents, and their revenue was $8.6 billion, which was a beat by around $50 million. So a pretty solid earnings report overall. We can see net revenues in the fiscal first quarter were $8.6 billion, which was an increase of 9%. So the company clearly has a history of beating their earnings expectations. And in fact, here on Seeking Alpha, we can see they've now beat the expectations for 4 consecutive quarters in a row. So pretty phenomenal earnings reports over the past year. Now, complete transparency, like always, Visa is a stock I added to my portfolio a couple of years ago, and I've seen pretty phenomenal returns thus far. We can see I'm currently up a little over 39% on this position. Now, the big question is, can Visa continue to grow at the rate that they've been growing over the past decade? And I think that's a very valid question. So let's go ahead and address this. And the first thing I want to point out is Visa already has the largest market share in their industry. We can see the top 2022 credit card networks by percent of purchase volume. Visa makes up around 41.7%, with the next closest being MasterCard at around 27.41%. Now, like I mentioned earlier, one of the things companies can do with their free cash flow is use it to pursue mergers and acquisitions. And that's something Visa has been actively doing over 2023. If we jump over to a new Seeking Alpha slide, we can see Visa bought a majority stake in the Mexican payments processor Prosa. If we scroll down, we can see this is a bid to accelerate the adoption of secure and innovative digital payments in the country. In 2023, they also announced they bought the payment and banking platform Pismo for $1 billion in cash. And if we scroll down, we can see this is basically going to help them provide banking and issuer processing capabilities across debit, prepaid, credit, and commercial cards for financial institution and fintech clients through cloud-native APIs, and it's also going to help them offer support and connectivity for emerging payment rails like Pix, the Central Bank of Brazil's instant payment platform. So Visa is clearly making moves to ensure their growth runway in the future. Now, with that being said, those acquisitions aren't considered organic growth. Will they see as much organic growth over the past decade? And a recent study actually showed that the global digital payment market in 2022 was around $81.03 billion. But in 2030, it's projected to be over $361.3 billion, which is a compounded annual growth rate of 20.5%. So they're projecting massive growth in this market over the next decade, and with Visa being the largest market share, they're clearly in a position to benefit from this growth. Now, with all of this being said, we need to answer the question, is Visa trading at a good value at $277.18 per share? And let's go ahead and jump into my stock valuation spreadsheet where we'll look at a few different valuation models to answer that question. Like always, if you'd like to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in stock ticker V and hit enter, and this data will automatically load in. We're looking at a 500-day change chart, so we can see massive share price appreciation during that time period. We already touched on the dividend metrics. We can see the company has a beta of around 0.97, so the volatility will be pretty close to that of the market. Now, the first valuation we'll look at is Graham's valuation, and this values a company based on how much they produce in earnings and what the growth rates for those earnings are. So we have our earnings per share forward looking from Seeking Alpha at 9.92. We have our growth rate projection, which remains very high for Visa. We multiply this by 4.4, which is the average yield of AAA corporate bonds, and divide by Y, which is the current yield on AAA corporate bonds, currently sitting at 4.76. Because this is so high, it will drive down the valuation a little bit, but with all that being said, we come to an intrinsic value of $215.49. Let's go ahead and keep moving forward and look now at our multiples valuation model. Basically, what we're doing is we're seeing how the market is valuing companies that are similar in structure. So we have MasterCard and Automatic Data Processing. Take their stock price, divide by earnings per share to get their price to earnings multiple. Look at that average PE multiple, multiply it by Visa's earnings per share, and we come to an intrinsic value of $291.58. Now, the last valuation we'll look at is the dividend discount model. Basically, what we're doing is we're predicting how much this company will pay out in dividends in the future. And to do that, we plug in the historical dividend payments so we can see the yearly dividend payments and the year-over-year dividend growth rates. It's been really phenomenal over the past few years, like we've already seen. We have around 7%, 17%, 20%, and around 15.5%. So moving forward, I'm projecting a dividend growth rate of 7.75%, discount rate of 8.5%, and we come to a dividend discount model price per share of almost $299. So when we jump over to the output tab, I'll zoom out just a little bit, but we can see the three valuations that we use in this scenario. We have Graham's at 215, multiples at 291, and dividend discount model around 299. When we average those three together, we come to an intrinsic value of $268.63 per share. That is slightly below the current trading price for this company, but with a 10% margin of safety, you could see our acceptable buy price at around $241.85. Now, I will say, I personally think this is one of the highest quality companies in the entire world, and for that reason, it will likely trade at a premium. So I think even if you buy the company when its current price is slightly above its intrinsic value, you may not see much short-term returns, but I think long-term you could still see phenomenal returns. Now, that being said, valuation still obviously matters, and there are still opportunities. We've obviously been on a huge bull run over the past year, but even a year ago, there were opportunities when this company was trading below $220 per share, and just a couple of years ago, we could see it was trading as low as around $180 per share. So it is important to be researching your businesses and knowing what their fair value is, so when those opportunities come, you can pounce on them. So there you go, there is a quick analysis on Visa. Go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. Like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.